Hi everyone, this is Prashad Parthiban. I've been getting messages in LinkedIn saying I'm a fresh college graduate and I'm just starting my IT career with say Guidewire or Duck Creek implementation. So I need to understand very basic about property and casualty insurance. So I thought of creating a training video which covers basics, very high level basics about property and casualty. So let's take a look. First, what is an insurance? Insurance is basically a method of spreading the risk of financial loss among large number of people. What does that mean? Say if you have a home, if something happens to your home, if you don't have insurance, it is your responsibility to cover the loss. In case if you have an insurance, all that you have to do is pay a little bit of premium on a monthly basis, and similar to you, there will be other insured who will be paying that premium, so that if something happens, the collection of premium will help us to cover the overall loss. That's why they say it's a method of spreading the risk of financial loss among large number of people. Now, what is property insurance? So property insurance is nothing but coverage that protects your stuff. When I say your stuff, your home, your car, or your company, your employees. That's why we call it as property insurance. Otherwise, first party insurance, which means it's giving coverage to you and your family members or your items like car or house. Liability insurance. This is the insurance that gives coverage to others because of your negligence. Like you did something, as a result someone else's property is damaged, then we take this liability insurance. It's a kind of third party where you are having coverage so that if something happens to your neighbors because of your negligence, then the liability insurance will come into play. What is an insurer? Insurer is the one who is going to cover your loss if something happens. As a result, you are going to make periodic payments to the insurer. In case, say, you have a car and you need insurance, you go to any insurance company like State Farm, Geico, NJM and get the policy. In this case, State Farm, Geico, all those entities are called as insurer. What is insured? Insured is the one who gets a policy. In our case, like if you get a policy for your car or if you get a policy for your home, then you are the insured. Similarly, in commercial lines, if a company gets a policy for their own entity, company, then or their employees who works under the company, then the company as a whole is called as insured. Premium. What is premium? It's a periodic payments that we pay on a regular basis to get required coverage. So, for an example, on a monthly basis, you may be paying $100. In case if something happens to your property, you will have a coverage of 1 million or 2 million which will be covered by the insurance company. What is a policy? It's a legal contract between you and the insurance company. The contract will list everything. The overall coverage amount, what is excluded, what is included. So basically a policy will tell you A to Z of the coverages. Risk. So the risk is a chance that can create loss to you or your property. So say if you have a home, the risk here is your home can be damaged by fire or your home can be damaged by some external calamities. So that's why we call it as risk. A property that has a chance of risk. Hazard. So hazard is nothing but the increase in risk. What is it increase in risk? Say if you have a car, you drive a car. So the risk here is when you drive a car, there could be an accident due to your negligence. That's what we call it as possibility for risk. Hazard is if you drive your car with consumption of alcohol, then you are increasing the chance of risk. So that is why we call it as hazard, the increase in risk. Peril. Peril is a cause of loss. Say you have a home, the possibility of cause of loss is fire, rain, and all other things. So that's why we call it as peril. Any cause of loss that results in a damage is called as peril. What is the loss? The actual loss. So if I have a home, if my home is damaged by fire, the actual loss is my home is the actual loss. Detectable. So if you see a policy, there will be a detectable associated with every policy. So if there is a loss of say 1 million, if your policy says the detectable is $1,000, which means your contribution is $1,000 and the remaining amount will be taken care by the insurance company. The initial amount that you have to pay from your pocket before the insurance company starts paying their portion of it. Indemnity. Indemnity is nothing but making sure that insurer is back to the normal life before the loss. For an example, if say I have a home which is valued at 800k, if something happens to my home and the home is totally damaged, now when you make the required coverage to the lost property and then making sure that you rebuild the home, so you are indemnifying the home or you are indemnifying the insured to the place where they were before the loss. That's why we call it as indemnifying. So these are some of the basic terms as property and casualty employee you have to understand. Now if you take any property and casualty policy, you'll see 4 different portions of the policy. One is the declaration page. If you take any policy that you get, say if you have a personal auto policy, if you take the policy, you'll see the declaration page. What is the declaration page? It will ask details specific to you, which means like it will say who is the insured, what is their location, what is the specific coverage amount. It goes on like that, when the policy will be effective. So any specific detail, this is a phase of the policy, which will be the phase of the policy. Policy forms. This will have A to Z details about your policy coverages. So like what is the coverage and when it's going to be effective, like more specific details about your coverages will be there in the policy form. All the coverage details. Endorsements. So if I have a policy, by default the coverage will have A, B, C, D. Now say if you have a policy, if you have a scenario where you need an extra coverage, say you have a home where you have a basement, certain policies do not exclude if there is a damage to your basement due to the breakage of pipes. Now in those scenarios you need a specific or additional coverages. So that is why you call it as endorsements. So you add endorsements so that you get extra coverage apart from the basic coverage. Exclusions. So as I told you, most of the policies will be very particular about exclusions. They will say like if you use if you are involved in some terrorist activities or if you use some items that are illegal, then you will not have required coverages. So it's very important every time when you get a policy, you look at the exclusions part very carefully so that when there is a loss, you are not into problem. Pretty much this video was targeting to those who are very, very new to the property and casualty insurance. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Thank you. Bye-bye.